Welcome back to the channel, guys. I'm your host, Buckning, and today we're just going to talk about some news that came out, just current events because I was gone there, and some news came out in regards to like the job market, wages in Canada specifically, not our friends down south, but we're going to talk about that today because I think a lot of people need to understand that we're a bit different when it comes to the job market in Canada compared to our counterpart down south in the United States. So a lot of people typically go off reports off what's going on down in the US and not actually pay attention to what's happening up here. And so, yeah, we'll talk about that, give you guys an update on the portfolio, but I'm back, but it was pretty big news in my opinion, but it is what it is and what that means for all of us. And it has to do with the job market. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as you can see here on the portfolio, today we're closing out at $14,581.71. That is up $52.36, up 0.36% for the day. For the 1 week, we're down $141.98, down 0.96% for the 1 month. Up $740.66, up 5.35%. For 3 months, down $486.71, down 3.23%. For the 1 year, down $594.40, down 3.92%. And for the all, we're up $950.76, up 6.97% for the all-time since starting this portfolio ever. And then in our cash account, we have $23.56 and $100 not available until Thursday. So that is the portfolio as it stands. And so I think on, excuse me, on the 4th there, that was Friday, when I was gone there, jobs report came out for Canada, and unexpectedly, yes, unexpectedly, Canada nationwide had added 108,000 jobs. And so why is that pertinent? Why is that important to Canadian news and to the market? Well, as you know, Bank of Canada is trying to slow down the economy, except it's having a tough time doing that, even with these interest rate hikes that Bank of Canada is doing for quite some time now. When you add 108,000 jobs to the market, and the Bank of Canada is trying to slow down the economy, one of the last things you probably want is for there to be more jobs added, and that would induce spending, which they're trying to slow down for the economy, because if everyone's working, everyone has extra money, they're spending it, which in return creates growth, which is a great thing. But with inflation, it's a different battle. And so it complicates things for decisions, of course. Even Tiff Macklem, he's trying to slow down, the job market. And the reason he's doing that is because he believes that the employment market is overheated, and it needs to slow down, because along with that, adding 108,000 jobs, salaries have gone up year over year, up 5.6%, which is actually quite a bit compared to what people are typically used to, like, maybe a 2% raise, maybe a 3% raise. And, a lot of people may complain that, they're not getting enough raise, but percentage wise, it's quite significant. And at a 5.6% rate, in the past, it would be more than, the rate of inflation year over year, which is about 2 to 3%. But year over year right now, getting a 5 to 6% raise year over year, that's what they're finding is trending, is quite substantial. When the Bank of Canada is trying to slow things down. So it's really just not counterproductive. And to be honest, I have nothing against employment or anything like that. But with the battle of inflation and the economy doing what it's doing, it makes it tougher, and it's not a bad thing to have jobs. I'm not saying it's a bad thing at all. So don't get me wrong in that. It's just it complicates things for the Bank of Canada, and it just might be a bit longer before the market actually slows down. And so that's pretty much it. And then for the economy, I think we're pretty much flattening out. I mean, on Wednesday last week, U.S. Federal Reserve increases interest rates by 75 basis points. Market seemed fine. Market seems fine today. Yesterday it seemed fine. Not like these huge drops, but I think what we're seeing is that these smaller companies with maybe a smaller cap market size, I would say, are struggling in the fact that their share prices are dropping just because they can't withstand the economic slowdown. In the US, big tech is laying off people and unemployment is going down. I mean, unemployment is going up, which is what they're trying to achieve as well. Trying to slow down inflation in that sense, slow down the amount of spending that's happening. And it's a constant battle because it's like people need to work in order to survive. But at the same time, people are working, surviving, have extra money, spend the money, creates growth, business profits go up, and interest rates go up, of course. And it's just this constant battle. And so eventually it has to get to the point, and this is Tiff's plan, is to really just slow that completely down to the point where he's I'm pretty sure he said this, and correct me if I'm wrong, he's well prepared to go into a recession, a longer recession than normal, until inflation is fixed, and he is comfortable with increasing interest rates as long as it takes to get inflation down. And like he said, he's okay with inflation. For him, it warrants it for him. And I mentioned that in another video, but unexpectedly, 108,000 jobs added to the market when the Bank of Canada is trying to slow the economy down. That doesn't slow the economy down. Usually when there's tons and tons of jobs opening up or added to the market, that just adds to the growth and is counter to what Bank of Canada would like the economy to do to kind of fight the battle of inflation. As for the US, they're probably heading in the right direction, 75 basis points. Big tech is laying people off or putting hiring on freeze in certain departments. A lot of these big companies that reported, the big tech companies, have all kind of mentioned that, they're going to try and cut down on the expenses and really streamline their capital expenditures. And that's not a bad thing. That's actually a really good thing. That just means the dollar is going a bit further and more strategized in allocation when it comes to profits, allocating it in certain areas, cutting these random projects. I know Google has mentioned that, and Google is one that I've kept my eye on for quite some time, as you should, because it is a big tech company and they do have quite a capital, quite a big market share, I guess I should say. And then, Elon buying Twitter and finalizing that deal. So that's some exciting stuff. And that's pretty much it for the market, guys. I have nothing to add. I think I'm getting to the point where you just have to be emotionally unattached to the market at this point. And I'm getting to that point where it's just kind of rinse and repeat. And the only interesting news is what the Fed or the Bank of Canada or the Bank of whatever is doing and how the economy is doing. That's pretty much it. That's I'm just at that point. I mean, everyone probably and their dog knows how to invest at this point. And there's some funny comments down in the comment section. So just read that for entertainment purposes only, because some people have, they're coming out of the woodworks now. They're really getting to the point where they want to buy things and they'll say funny things. And just remember, when you sell an investment, like a stock or a share or one of the things that you own, there is always another buyer on the other end, right? And so there's always someone there looking for a good deal. And if you're selling at this point, man, it's a pretty good deal to pick up those shares of whatever company it may be. I mean, if you picked up Google shares today at 87 or $88 or whatever it may be, someone sold it at that point. Maybe they made a profit, maybe they didn't, but you sure got a good deal if you see the value in that company, of course. So that's just an example. So just remember that every time you sell, on the other end, there's a buyer. Every time you buy, on the other end of that transaction is a seller. And so, yeah, I mean, that's just the way it works. And if those transactions keep happening, then the market is where you need to invest. And that's not financial advice. That's just like common sense when it comes to, well, not common sense, but general information when it comes to the market and buying and selling, you know, and really whatever your strategy may be, whether it's value investing, option trading, or whatever it may be, day trading, buying and holding, and so on and so forth, or dividend investing, or value investing, growth investing, whatever these terms that people describe their investing strategy, whatever it may be. I mean, just remember that's just how it is. There's always two ends to the transaction. It's not just one end at all. There's always two parts to the transaction, or three parts. Always a middleman or something, but on each end of that transaction is a buyer and a seller, or a seller and a buyer. So that's pretty much it for the video, guys. Let you guys have a great week. I won't let you, but you will have a great week. I'm finding the markets are pretty steady, and we'll definitely see you guys in the next one when we make the next purchase of the position, and maybe come up with some better news, of course, or anything. But if you have any suggestions, leave it down in the comment section below. And no, it's not going to be cryptocurrency, and no, it's not going to be consolidating into one or two companies that pay a dividend. That's just silly to me. So other than that, guys, have a great week. Thanks for watching. We'll see you in the next one. Bye.